Welcome, everyone, to this session talking about voluntary carbon markets at an inflection point. We have an excellent panel for you today. I'm Ricardo Bayon. I'm a partner and founder of Encourage Capital. I'm also an adjunct professor at Brown University, where I teach a course on environmental finance, including a whole section on carbon markets. Before that, I helped found the Ecosystem Marketplace, which, as you may know, is a news and information site on environmental markets. And they put out an annual report on the state of voluntary carbon markets, one of the best, I think. You should definitely check it out if you haven't already. Um, and I've been working in carbon markets and monitoring carbon markets pretty much since they began in the early 2000s. Wrote a book about voluntary carbon markets in 2005. So I guess what I'm saying is I'm moderating this panel because I'm old, and have seen many of the ups and downs in carbon markets. And we talk about an inflection point right now, and I think that's true. But this market has seen numerous inflection points. I think if we were to sort of number it as they do in Silicon Valley, we're about entering carbon markets maybe 5.0, maybe 6.0, just to make up a number. And each of the movements from one market to the other came through an inflection point. And I think many of the inflection points have touched on the issues that we're facing now, including integrity in the market, including demand, including relationship to government markets and government-created markets. Um, so it's definitely not the first time, but I think this is an incredibly important one. And I think it's an incredibly important one because of the size of the voluntary carbon markets now and their relationship to regulated markets and where we are in the battle against climate change and how far behind we are in addressing many of the issues of climate change. So I think this one is a particularly important one. And I would say that there are numerous sort of angles to this inflection point. One of them is, as I've said, integrity and questions about the integrity that have come from, you know, journalists, scientists, and others. And I'd say, my take on that, and we can hear more about it as we discuss it today, is that some of the criticisms against the voluntary carbon market are founded. Some of them are not as founded, in my view. I think a market like this one always needs to push integrity, always needs to get better at what it does. But it also can't be throwing out babies with the bathwater. And I can assure you there is babies in this bathwater. I think there is real benefit to the voluntary carbon markets. And if you think about it, what we've done in the creation of this voluntary carbon market is something really, really special. We've gotten a number of, you know, companies, corporations, individuals to voluntarily try and address climate change. Now, I agree with a lot of people who say we need government regulation. We need government to step in. We need government to do the right thing, to regulate emissions, to do all the things that we would like to see happen to address climate change. But the reality is government isn't moving fast enough. And so I think the voluntary carbon market has played, and will play an incredibly important role in helping us address climate change and helping us think through and do what we need to do. I think the criticisms around integrity have taken a toll on the market, and we've seen that. We've seen that in the numbers. The market that reached its peak about 3 years ago at around 2 billion went down to about 1.8 billion is, the latest numbers we have from Ecosystem Marketplace and others is that it's hitting around 723 million. And what we're going to talk about today, which is specifically around forest carbon credits and the role they play, I think is an incredibly important aspect of this because they have seen some of the most precipitous declines in both volume and pricing in the voluntary carbon market. And I think, again, this is understandable, but in some ways misguided, because we're going to need natural approaches, natural solutions. We're going to need forestry to address the problems of climate change. Depending on how you count and who you ask, emissions from the land use change and forestry sector account from anywhere from a quarter to a third or more of emissions. Plus, they are some of the most important aspects of the potential solution going forward. And hopefully we'll hear more about that as we get into sort of the science discussion here. So again, I think we're not going to get to where we want to get to unless we truly take in the role that nature plays in addressing climate change, both as a source of emissions as well as a potential sink for emissions going forward. And for better or for worse, the voluntary carbon markets have been one of the main players on this stage in helping channel capital to projects that are trying to preserve forests, grow more forests, or address the nature-related aspects of this. Another important aspect of this inflection point is around the role that governments around the world are playing in creating their own markets. And if you look at sort of the data, regulated markets account for about $100 billion of transactions, roughly, whereas voluntary markets are about 1 billion. So they're much, much smaller. Now we're having discussions within the UN about Article 6, and there's a question about how whatever emerges out of the next COP in Baku around Article 6 or in COPs beyond that, how that will play a role or interact with or interface with voluntary carbon markets. And that's another aspect of the inflection. I would say that perhaps a third aspect of the inflection that we're in is the science with satellite imagery, satellite technology, artificial intelligence. Science continues to develop apace, and how that will impact the markets and make them, better, more credible, et cetera, I think is incredibly important. And then on the policy front, we've also seen tremendous movements through the creation of the Integrity Council for the Voluntary Carbon Market, through the Voluntary Carbon Market Integrity Initiative, as well as initiatives in the US and other countries around discussions around the voluntary carbon market. All of these are designed to try and think about, bring about, a bigger kind of infrastructure around integrity for these markets. So all of this is happening kind of at the same time that we need just about every possible solution we can think of to address climate change and avoid a catastrophic change in the climates around the planet. So that's what we're going to talk about here, specifically focusing on forestry, carbon, on red, which, as I've said, has seen the most precipitous declines even within the voluntary carbon market. Red credits, the price and the volume and the pricing of red credits has dropped more than just about any other credit type out there, in part for some of the reasons we've talked about. And I think, some of it founded, some of it unfounded. But and we have a perfect panel to talk about all this. We have Sassan Saatchi, from CEO of CTREES and a senior research scientist at NASA Jet Propulsion Labs, to talk to us a little bit about the science around forest carbon credits. We have Pedro Martins Barata, who is a AVP of carbon markets at EDF and a co-chair of the expert panel of the ICVCM, can talk to us a little bit more about policy and markets. And McCall Landry, who's a senior director of sustainable finance at EDF, to talk about some of the supply and demand dynamics. So without further ado, I'll ask Sassan to introduce himself a little bit more than I've done, and then kind of ask him about this inflection point around the science and how it's changing, and what the science tells us about sort of the benefits or otherwise of the forest carbon market, and why we are where we are, and how we get to where we need to get to. Sassan, over to you.
Good. I hope everybody hears me. Thank you so much for that great introduction. I have been working in research for almost 30 years now. Right away after I graduated, I joined NASA Jet Propulsion Laboratory, and I've been there. And almost now 3 years ago, we started CTREES, which is kind of a nonprofit organization focusing on bringing science and technology in an operational way to to mitigating climate change, especially in the area of the land, carbon, and forestry. So what I like to do to just start by saying why this nature-based solution is extremely important. So I have one slide to share and then get into the conversation a little bit. So I hope you see my slide. This is some of our recent results that we put together. It kind of matches what the IPCC reports every year on the status of the global carbon balance. So we use a lot of other data sets to basically augment this. But if you look at the numbers here, it's extremely interesting. So fossil fuel is a large component that we have been always focusing on. And there is a significant ocean sink that we always keep it as kind of stable sink and gradually increasing over time. But the most important part in this picture is what the land is doing. And those numbers are mainly coming from forest and woodland. Is almost 80% of the whole interaction of the carbon with the atmosphere. So the gross emissions, not the net, but the gross emission that comes from land use change, forestry, and also including fires in the woodlands is approximately half of what we put out there from fossil fuel. And then there is a huge, a part of it that stays in the atmosphere and grows over time, but there's a huge sink in the biomass of live trees with a small component as a net that goes into the soil and moves probably to the ocean or remains in the soil. Now, there is a huge science to really put this thing together. And but the component which is important is land is really difficult to ignore, and forest is difficult to ignore because it has a huge contribution to the atmospheric CO2, and then it has a huge potential for mitigating carbon and reducing carbon from the atmosphere. So if I stop here, I would say that we really cannot ignore this. And that's why there is a huge effort to make sure that we reduce the carbon that goes to the atmosphere from the deforestation and land use change. That reduction of the carbon is extremely important. And when you reduce the carbon, you automatically increase the removal because forest remains on the land, and that actually improves the removal or absorption of the carbon from the atmosphere. So the two are pretty much tied together. And if you can also enhance the removal by planting trees, by improving forest management, which is basically what US sink is on the land. They basically major forest management, especially on the eastern coast of the US, has caused almost 10 to 15% carbon sink in the land of the US. So I think that's an important component. If we are planning to go towards net zero, especially since technology on reducing fossil fuel emission has been much slower, and there are a lot of issues in order to develop this, even though there has been a lot of research and investment on it, the land part is extremely important to think about when we go towards net zero. So especially with 2050 and 2070, we need to really focus on this. So I think this is an important, go ahead.
Yeah, no. I wanted to ask a couple of follow-up questions to this. One is, we're talking here about a role that markets might play in helping that sector that is clearly one of the more important ones in terms of both sources and sinks for emissions. Do you think markets are the right way to go forward? And as you know, there have been numerous criticisms of voluntary carbon markets, in particular forest carbon projects, around their integrity and the way they've been structured. Do you think we're moving in the right direction in that sense? And what do you think needs to happen to increase integrity on this?
Sure. I think in general, I feel we need to kind of uh, stay away from some of these false dichotomies that has been created in this whole climate mitigation world. Like we need to focus on industry and not on the land, or we need to focus on you know planting trees and not reducing deforestation, or we need to focus on market or policy. I think we need all. And there are issues about policies that, how it can remain and how it can actually become kind of a permanent issue. You've seen that it's extremely difficult to implement policies, especially in the global south, where most of these deforestation is happening, and the countries really need the help and economic, development in order to be able to avoid deforestation. So market, I think, plays a major role. And
It's
we
not
really
only the
need to,
global south, Sachin. I mean, look at the US. I won't say
exactly.
policy is particularly effective and well well done here. And politics makes it even more difficult, but sorry. Yeah.
Yes, no, I agree with you. And I also think that, the um, economics of the whole globe, both in every aspect, is clearly links us to the market as well. It is impossible to, in a world that actually builds on capitalism and all the aspects of that market, suddenly to come up with a policy that completely ignores that, especially because economy runs actually policy. I think we need to bring it in. I'm not a politicians or economist, but I really think markets is extremely important, and especially if we are thinking about how the funds for carbon, especially in preserving forests or reducing deforestation, can help communities. And that's where the policy may fail sometimes. And you've seen that picture from the Bolsonaro effect in Brazil. As soon as a person would move, and we've seen that in US, suddenly the whole climate policies may change. And if, there is no enforcement, then suddenly people who are extremely dependent on the land may go and do the deforestation. I think so that's an important to really bring in. So another thing which market can help is actually expedite this whole process, because it brings incentives to really help. Some of the policy development takes a long time. Remember Paris Agreement, we spent ages to really get that thing moving, or EUDR is another example, is taking a long time to really implement it. Now, the last piece is if we
And
go
that's the
through
EU
both,
deforestation regulation.
exactly, the basically zero deforestation trade for commodities that comes from the tropics. So I think last but not least is, what are we going to do to make sure this issue about the inflection points, and also issue about market having integrity and links to the science, um, basically move forward. I think there has been a realization in the community after several criticism, and that some of the carbons that came to the market were not valid, or were overestimated, or issues about that. And partially that comes because a lot of these carbon credits was linked with some of the conservation efforts that has been going on the ground, and basically the methodologies were not really tight in terms of bringing science and technology and monitoring to it. Now that realization has happened. There is a huge movement within the standards and methodologies. ICVCM is definitely doing a great job in terms of developing new frameworks, and the carbon, basically, the core carbon principles are also another element of it. I think there is a major effort now to bring science into this. Vera especially has changed several of their methodologies. They're bringing more kind of observational unit, both from the remote sensing, which is observation from satellite that can actually almost close to real time tell us what's going on the land, and making sure the carbon assessments meets some of the major requirements that we have in terms of accuracy. And accuracy and uncertainty now is played a major role in terms of the bringing risk. And that's an important thing, because science is not completely set in everything. We are still finding solutions to climate mitigations. For example, in California, we have issues about some of the forests.
Sassan, I'm going to ask you to hold that thought for the questions.
Okay,
I just
good.
want to make sure we have enough time to get to questions, because I think this issue of science is incredibly important, and how it's changing and how it can help us ensure this integrity. But you talked a little bit about the creation of the ICVCM and some of these integrity initiatives. And I want to turn to Pedro, ask him to give a little bit more of an introduction of himself, but also to tell us a little bit about what's been happening with ICVCM and how he sees that process going forward, and what he thinks the impact has been or could be of ICVCM on this issue of integrity. Pedro?
Thanks, Ricardo, and thanks for having me here in this webinar. So to the question, so first of all, I'm with Environmental Defense Fund as AVP, as you mentioned. I'm also one of the co-chairs of the expert panel of the ICVCM, the Integrity Council for the Voluntary Carbon Market. And essentially, what we've done over the last 2 years is we developed a framework to assess the quality of carbon credits. That we've done, and we've published that framework in a year ago. And so we're, at pace, we're trying to go through the entire pipeline of carbon credits in the market, and judging their quality and seeing whether or not they meet the core carbon principles that Sassan has already mentioned. And to date, we've come out with already some decisions. So to date, we have around 27 million credits in the market that are potentially core carbon principle eligible, CCP eligible credits, or CCP compliant credits. That's around 4% of the market. We've also taken a tough decision to exclude existing renewable energy credits from CCP eligibility. So these account roughly around a third of existing issued credits. And we've taken that decision because we found that the methodologies that programs had developed, and these are quite old methodologies, did not meet our criteria, specifically in relation to additionality requirements. So even if there are, and there no doubt there are very valid renewable energy projects out there that had been getting these credits, at the methodology level, we just couldn't assure anyone that they would meet requirements to our standard of additionality. So that's what we are going through now. The biggest chunk of credits in the market is still to be assessed, but we are expecting to have two, I would call, major decisions coming up in early November in terms of publication. And that would be decisions on RED Plus and J-RED, and decisions on cook stoves. So that by the end of this year, we will have the vast majority of the currently issued carbon credits already undergone assessment. So that's where we are in terms of the assessment. An additional issue to note is that we do not only do assessments, but as Sassan has already highlighted, we also in the Integrity Council are convening what we call continuous improvement working groups. And the idea is that through these working groups, we start establishing guidelines for what is, let's say, the next generation of guidance that we will be putting to the market. We already did this with one working group on permanence, a key issue and a very much hotly debated issue with respect to nature-based solutions. And we will be conducting other groups on things like whether or not corresponding adjustments should be applied to the voluntary carbon market, how do we improve transparency with relation to market transactions, how to improve the digitization, and how to include data systems that are more digitized and improve therefore the MRV. To the second part of your question, does all of this have an impact? Well, the first thing to note is that we already had an impact by the simple fact that when programs apply to us, we require them to be assessed against our criteria. And in many cases, we have had to request changes to the existing programs to comply with our criteria. So things, for example, like enhancing the transparency of the registry systems that each carbon crediting program has, that is already let's say, a fait accompli now because of their registration with us. But beyond that, we are seeing increased interest in high quality credits as the CCP labeled ones. And we're seeing prices steadily increasing with an expectation that you'll see more and more a differentiation in price between those credits that meet our standards and those that don't. That has been seen in various data points. Prices, the CAR-ACR index from Allied Offsets, for instance, has reached its highest price since 2023. And with respect to one rating agency, Calix Global, we've also seen that the E-rated credits by Calix has dropped to by almost 50% from January to July 2024.
Do you have any data on any
increase in quality, I think?
Yeah. Do you have any data on a premium being paid for CCP?
The question gets asked a lot of times. The first thing to note is that we do not work towards a premium, obviously, but we're very happy to see it. And what we have seen is, and this is word of mouth mostly, but we've seen indications of a premium that is now currently between $3 to $5 a ton for CCP labeled credits. Over time, we do hope to maintain or even to increase that, so that the theory of change behind the Integrity Council is that you're standing up a better quality market, and that fetches higher prices.
Right. I think it's interesting that we're seeing all of this happening at the same time that there's change at the global international level and discussions within, various UN frameworks, and in particular, the COP to the Climate Change Convention, and what's known in these discussions as Article 6, which talks about markets for carbon, and new and emerging markets for carbon. I wonder if you could tell us a little bit about how you see that discussion going and how it may interplay with voluntary carbon markets going forward.
So it does absolutely, and at several levels. Let me give you one very simple example. One of the categories I just mentioned, one of the categories that we're coming up, hopefully with decisions soon, is the category of fructose. One of the factors into determining the quality of fructose is the calculation of the emission reductions, and that's critically dependent on one particular parameter. That parameter is under the CDM Executive Board, one of the bodies of UNFCCC, is actually undergoing revision. So while ICVCM is doing this assessment of quality, we're also very much in touch with the UNFCCC and looking to see how we can incorporate their findings into our work. And that happens across many different aspects. As I would also suspect that, for example, our decision on renewable energy methodologies will be at least consulted on by those within the UNFCCC framework that are looking to approve the new generation of methodologies. So at that very basic level, I think there's a lot of points of contact, and there's now, I would almost say informally, but literally there are phone calls between ICVCM and UNFCCC. The intent obviously is not to pressure but to keep abreast of developments so that we can get a kind of synchronized and as seamless transition between the voluntary carbon market and Article 6. Now, the difficulty here is though that there's a different pace of development between what has happened on the ICVCM and on Article 6. And on a political level, Article 6 has become much more difficult to reach a consensus than we had anticipated maybe 3 or 4 years ago. So we all know there are key issues related, for example, to the admissibility of avoidance projects, or whether or not removal projects, in particular nature-based removals, should be incorporated or not into Article 6. All of these discussions, we need to see them get to some fruition so that we can then, as ICVCM, to the extent that we can, incorporate them into our own framework. But obviously
now, let's come back to that perhaps in the Q&A, because I think there's also another mechanism of interaction in the sense that, Article 6 talks a lot about trading between countries and how countries set up their own registries, set up their own mechanism for what carbon projects are done in the country, how those are traded, how those are accounted for. When some of those projects are likely to be voluntary carbon projects in the voluntary carbon markets, there will be an issue of how those two things interact. So I think this is a really important part of this inflection point in an interaction. But I wonder if we could turn to Dylan now to talk a little bit more about kind of the market trends, and in particular demand side trends, because obviously it's great to have integrity for carbon markets, and it's great if we put a price on carbon, but that price won't happen if there isn't demand for the credits. And we've seen a pretty drastic decrease in demand over the last year. How do you think that demand is progressing? Where do you think it's going? Do you think things like what Pedro is talking about and Sassan is talking about in terms of trying to ensure integrity is going to bring us to the point where demand will begin to meet supply, as it were, out there?
Yeah, sure thing. Thanks, Ricardo. As a very quick intro to myself, I work with Pedro at Environmental Defense Fund, and I split my time pretty evenly between working alongside the LEAF Coalition, helping them secure kind of upfront financing for tropical forest nations, as well as providing kind of direct transaction advisory to governments to help them better understand these nascent markets. And my background is in management consulting and in the startups, so trying to bring some of that perspective to help some of these supply countries bring that online. I think the first thing, though, and to address your question, is on the demand front. I think, Ricardo, you've already pointed out that the overall value of the VCM has really dropped precipitously over the last couple of years. I think on top of that, and another data point is just looking at corporate retirements, which have really plateaued for the last 3 to 4 years. And what this means is, really stagnant corporate ambitions and reduced funding to asset owners and to the ultimate beneficiaries of these projects. I think obviously driven by questions around integrity, which is, a really important facet in improving standards. But in the immediate term, this just simply means there's less financing for vital forest conservation. So that's first and foremost. Secondly, though, is when we're looking at these higher integrity sources of supply that ICVCM is assessing, I think there's a lot of really strong indications that corporates who, kind of trying to buttress themselves against negative criticism are looking for safer investments through higher integrity credits. I think a couple data points is, first, the LEAF Coalition itself, these deals are being signed at prices, 2, 3, 4 times higher than REDD+ deals in the market. We've also done a survey with Boston Consulting Group, which is pointing to kind of a willingness to pay a premium of 20 to 40% for jurisdictional REDD+ projects. And then even if you just look at kind of the integrity of individual REDD+ projects, you're seeing a really stark divergence between low integrity and high integrity projects. So I think, really in the lead up to COP, I think I'm optimistic we'll see renewed demand for that. And there's already really strong indications that there's kind of a bifurcation of the market between high integrity sources and then some of these lower integrity ones out there.
Hmm. And I mean, how is that playing out in terms of pricing? Are you seeing any differences in the pricing? And how do you judge the integrity? I know there's been a number of initiatives around, creating basically carbon credit rating agencies to look at some of these issues of integrity. Are you happy with the way that is developing?
Yeah, I mean, I think on the pricing overall, the market has really suffered from a lot of this continued negative criticism on that. And again, this results in less financing to the ultimate beneficiaries. That being said, if you were to isolate just on the red plus markets, credits that are assessed high integrity ratings, so there's a variety of independent credit rating agencies on that versus lower ones, you're looking at about an 80% premium for the high integrity credits, even just over the average ones. So I think that's pretty significant. I think second, and I think this will be borne out over the next couple months, is corporate demand is really migrating towards jurisdictional red plus credits and or jurisdictional baselines for these, which create a higher burden for integrity. So I think that is without a doubt positive signs on that. And I think both independent rating agencies, regulated markets standing behind certain standards, and independence governance initiatives like the ICVCM are really critical in directing corporate dollars to these kind of highest integrity sources.
Okay. I wonder if you could talk to kind of where the corporate ambitions are, and has that changed as a result of this? Have we inadvertently given corporates a way out by saying, "Oh yeah, we're not going to do as much now because there's questions on quality here," and they were. And where do you think that's going? And are you optimistic of where things are headed in the future?
Yeah, I think it's a great question, and there's a lot of dialogue within both kind of some of these voluntary governance initiatives, VCMI, you've cited, SBTI, and others. I won't go into the minutia of that, but I think kind of a pervasive source of criticism is that essentially, allowing companies to buy carbon credits or carbon offsets will allow them kind of a get out of jail free card to actually their own internal decarbonization efforts. And I think this criticism completely misses the mark, and for several reasons. I think first and foremost, no one is advocating that companies abdicate the responsibilities to decarbonize. Not a single environmental NGO, no corporate has said this, no government has said that. So I think it's just as Sassan said, it's a false dichotomy. Second, we've seen through numerous studies that corporates that are actually investing in carbon credits are both investing more in their own internal emissions reductions efforts by up to 3 times, as well as decarbonizing faster. And third, carbon credits, for all of the press they get, only represent an incredibly small share of overall kind of climate ambitious, of around 2% of total emissions globally. And so I really think this is kind of a false narrative because it's not decarbonize or invest in some of these carbon crediting solutions. It's really an all-in-one approach where we need to do all of the above to meet Paris Agreement commitments.
Great. We've come to the time when I think we should turn it over to questions. There's a couple of questions in both the chat and the Q&A section. Pedro, I think you might be best placed to tackle the one in the chat. We have here about clear steer from ICVCM on issues with renewable energy credits. Do you want to read it out and answer it? I'm not sure if everybody can see that question.
Mm-hmm.
Pedro?
You're muted, Pedro. Okay.
Yeah. Sorry, my computer is cracking. So let me read out the question. So essentially, now that we have a clear steer from ICVCM on the issues of renewable energy credits, are the panelists worried about the volume of old CDM renewable energy credits that have transitioned into Article 6.4? And is this going to lead to a race to the bottom and another wave of scandals in the carbon market? I think first of all, let's break this down. Obviously, the ICVCM was looking at pretty much those same methodologies that were used under the CDM. but applied by gold standard and Vera. Our understanding, and I'm not privy to everything that is happening under the UNFCCC, but our understanding is that as for the methodologies, these old methodologies, they are now in the process of transitioning over to the Article 6 framework. And for these methodologies, my understanding from talking to several of the experts is that they're well aware of the same issues that the ICVCM has highlighted. And so my expectation would be that they would come to very similar conclusions in terms of the need to improve significantly the additionality testing for new versions of these methodologies. So what about the renewable energy credits, which I think is what the question is looking at? Renewable energy credits that had never gotten a market for, would they be able to transition? What would it mean for the carbon market? Well, first of all, it would not mean much for the voluntary carbon market, because if they are transitioning, they're transitioning into Article 6, and Article 6 will be primarily a market driven by sovereign demand. We know already that several sovereigns have already stated they will not be buying from these transition credits. So I do think that there's ways to limit that impact. In terms of the voluntary carbon market, my expectation would be that the voluntary carbon market will not be dabbling, so to speak, with these new, let's say, recycled old Article 6 credits coming from CDM. And so I would see these as, potentially eventually becoming over time stranded assets. In fact, like many other stranded project types that we've seen in the CDM in past occasions.
I wonder if you could touch on this question that I threw out there in terms of like, how will the intergovernmental trading that Article 6 is trying to create impact voluntary carbon markets if they're registered through the country, and the role of national governments in sort of overseeing or having registries that include voluntary carbon markets, and what that will do to voluntary carbon markets, if anything?
Right. So, first of all, that's a huge question. It probably takes 15 minutes to answer. But just realize, first of all, there is a framework under the UNFCCC that has Article 6, and that Article 6 is at the service primarily of demand coming from sovereigns, from countries that want to meet their nationally determined contributions. There is an open question as to whether voluntary carbon market standards, so to speak, so standards that have been developed for the voluntary carbon market, like the Vera ones, the gold standard, etc., can or could they be used for the purposes of Article 6? I think it's clear that at the very least under Article 6.2, that will be the case. That is already being the case. There are a few Article 6.2 projects that are, in essence, projects that have been developed with methodologies that have come from these voluntary standards. Then there's a very thorny question, and one that carbon market experts have been grappling with for many years, which is whether once you have a transaction between, let's say, let me say names here, between Amazon in the US and a red project developer in Brazil, whether or not that transaction needs to have or be subject to the same accounting rules as Article 6, and then specifically the need for what we call host country authorization, or in the jargon, we call corresponding adjustments. Now, there's various differences of opinion on this. A personal opinion, no, it should not necessarily be subject to the same corresponding adjustment, because Amazon does not consolidate. Amazon does not do anything in relation to the US NDC. But there are various shades to this argument, and there are instances where not applying a corresponding adjustment, i.e. not forcing that corresponding adjustment, could actually impact the environmental integrity of the trade. But I think that's very, very specific.
Great, thanks. We do have a question here around any projection as to when we will expect VCM to recover to previous historic highs or maybe even go beyond. I think, Dylan, that might be one that you can tackle.
Yeah, I'll take my best shot at it. I think, without a doubt, 2024 is not going to be to date, the year that this happens. And, we're already seeing this in the data where corporate retirements are trending slightly below 2023. There's usually a general uptick at the end of the year, but we are not, leaps and bounds beyond that. So I think several things are going to need to occur rather than trying to pinpoint a date and time for this to happen. I think one is, ICVCM to issue kind of full guidance on this. A lot of corporates are in a little bit of a wait and see mode on making sure that they have kind of line of sight on what credits are going to count towards that or not. That's forthcoming. I think, the second is really clear guidance from SBTI on the use of scope 3 emissions for carbon offsetting. Unfortunately, that guidance doesn't look like it's going to come until late 2025. And then the lastly thing is really kind of high integrity sources of supply coming online that really can help shift the narrative of what this looks like. And I think, that is meaningful, and that's in the near term. We've already seen Guyana issue jurisdictional credits against this. It looks like Costa Rica and Ghana are in a good place to do this early next year. In Brazil, we're hearing signs that there's really optimism on several large deals getting done over the next couple months. And so I think it's not going to be any one single factor that drives up demand and prices in the market, but really a confluence of factors for this. I'd say lastly, there's really no alternative but for the market to go up. There is no viable technological pathways for companies to hit their SBTI or other targets by 2030 without using carbon offsets. And there's no alternative for the planet to hit, 1.5, 2 degrees Celsius warming levels if we ignore financing for nature. And so I know this is not a specific date, but I would say we're at really a trough, but they're starting to see kind of light at the end of the tunnel, and there's really no alternative pathway to get there and to go but up.
Yeah, and I mean, just going back to the history of these changes in the market, I think what we've seen is that it takes at least 2 years, maybe anywhere from 2 to 5 years, for the market to get back on its feet. But when it does, it usually surpasses and far surpasses where it was in the past. Now, that doesn't mean, as they keep saying, past performance is no guarantee of future results. So, not necessarily what's going to happen. But if I had to make a prediction, I'd say, 2 years at least to get through some of these issues, 2 years for ICVCM and VCMI to sort of begin to really filter into the market in terms of supply and demand. And I think another key factor here is pressure from constituencies outside around the need to reduce emissions and pushing for more voluntary and more other approaches going forward. And also the role that Article 6 and governments, and we saw the US government come out pretty strongly in favor of looking at carbon markets and thinking more deeply about carbon markets and voluntary carbon markets in particular. I think, obviously depending on what happens November 4th, I think we'll see some really interesting developments here. I don't know.
Maybe one last thing to add to that is, I think what matters for the environment ultimately is the amount of financing that's going to these sources. And I know we're talking about kind of voluntary demand and voluntary financing, but I'd be remiss to point out there, CORSIA, which is governed under kind of international aviation, Singapore, which has a carbon tax regime, South Korea, which has a cap and trade regime. These are all regulated sources of demand that are really starting to open up to international carbon crediting and providing a vital source of financing for avoided deforestation and land restoration. And so I think, without a doubt, those are going to be putting upward pressure on prices in the market and will hopefully help unlock, future supply and something, we're really optimistic about.
Great. I know we have some questions about further questions about integrity that might relate to the work that you do, Sassan, around technology and the role that technology may help play on integrity. I wonder if you could go a little deeper on where you see that going and how we can push for technology to play a bigger role in integrity, not just in, the measurement that goes into verification, but also the measurement that goes into sort of ensuring quality and maybe through the credit rating systems that are emerging or governmental systems that are emerging. Any thoughts there?
Yeah, I mean, I think one of the key element that has been recognized in where the kind of problem arises when you are developing carbon credits and making large scale is in the process of scaling up the problem. So if you're always working on a small forest areas and you quantify it very well, you monitor it very well, you protect it very well, but as soon as you go to millions of hectares and extend it across, it becomes a difficult problem. So uncertainty usually is in the process of scaling up. So what the science community has been doing and spending time is bringing all the resources we have to make sure the process of scaling up is kind of pretty precise moving forward. That means we bring a lot of satellite observations, which actually monitors deforestation activities and the emissions that comes out of that. And then we also provide better estimates of carbon. The space agencies has spent almost close to $2 billion to really solve this problem. And a large community of scientists has been gathered around this. How do we really quantify, especially on the land part, the carbon and follow it all the way through, maybe to some extent through the supply chain, meaning how the carbon is just being released from the land moving forward. So I think with the recognitions that the methodologies and the standards also have, this thing is gonna basically get integrated much better moving forward. And I have to say that, especially with these carbon coming from the jurisdictional red part, because there is a agreement within the science community that we really need to, in order to get to net zero, front load the emission reduction as much as possible. Now, this kind of in the long-term net zero activities going on, it works, but you need to have these short-term events that really helping. So there is a possibility, and it can have a domino effect also in the market. As soon as there is an effort to really respond to some of these, emission reduction efforts that has high integrity and has been really monitored well, come to the market, and then actually can increase. For example, the J-REDs now are coming in. So I think there is an effort in that. The other part is this nested approach in terms of bringing not only the jurisdictional level, which brings policy and market together, but also allowing projects working at the community level and smaller scales to fit in very well. So science is coming in to make sure there is no double counting, there is no kind of problems with that carbon credit comes. The accounting would be done really carefully. So I think we're in good path, and we're waiting to just the market opens up so we can actually come in and help with the scaling up.
Right. And just for context, I think the issue with jurisdictional red has always been around this concept of leakage, saying, hey, you protect a forest here, but somebody else goes and destroys a forest. That person who was going to deforest here is now moving somewhere else. The idea behind jurisdictional red is that it makes the pie bigger. So it gives very little room for a forest actor to move and address leakage. And there are other issues that jurisdictional helps address. I wonder if I could ask you a follow-up question around red methodologies, which have come under a lot of attack recently. What are your views on the Vera red methodology? Do you think it's an improvement on where they were? The updated red methodology that they've recently put out.
Yes, I think there is a significant improvement in JNR. I mean, there were several problems. One was baseline, as you also approached it, not having the right quantity for baseline. It really impacted the way that the carbon came to the market, because it wasn't really correct. And sometimes it's not just the fault of the project developers, but actually the methodology was too flexible to really allow a variety of things coming in. So tightening up that baseline, making sure that it actually stays within the jurisdictions, the risk of the deforestation in different areas is connected to the jurisdiction is extremely helpful. And now they even have a 10-kilometer buffer zone around every jurisdictions for the leakage to really think about that. So that's, I think, one area. The other area I think it has been extremely helpful is looking at these dynamic baselines. So a lot of carbon market is focusing on that. So that means we really can update the baseline numbers. So we don't stay with the fixed one. The market might be not happy about this so much, but as soon as they see that this really improves the carbon that comes to the market every year and adjusts itself moving forward, I think it brings a more assurance within the investors that the credit is kind of the right credit moving forward. And I think last but not least, the whole nested approach, I think, is becoming more and more helpful. So if RED becomes a more of a jurisdictional entity using that baseline, but other type of projects such as, you know, ARR or improved forest management, which are all different varieties of, you know, nature-based solutions, and there are a lot of innovation in that, remains in that, then that can actually make the carbon tracking a little bit more reliable.
Right. So we have a lot of questions we're not going to get to. I'm going to read out the ones that we still have, some of the ones that we still have, and then have a bit of a round robin that anybody can take any which one they want. And hopefully we can stay on a little longer than the end of the hour. So we have a question that says, many of my fellow reporters, including myself, have been inundated with Climate Week events and interview requests from VCM players, project developers, integrity standard setters. With that, in the context of a Biden administration push on the VCM to be included in a substantial way in a climate finance package at COP, is this inflection point different in any significant way from previous ones? Is this the VCM's big moment to gain legitimacy on the international stage and actually get baked in to climate finance policy? So that's one. Then we have another one saying, I have a question around project quality issues and the way forward for projects that are currently registered. Vera lifted its hold on the Southern Cardamom Red project last week. Credits from that project have since been offered and traded at very low prices, essentially the bottom end of the price spectrum. Is there a fiscal path forward for projects such as South Cardamom? And what does that look like? Are some projects beyond redemption, even though they have the green light from a registry? And then finally, do you have any worries on Article 6 negotiations actually weakening the integrity of carbon markets by not setting ambitious enough standards or little transparency? So, you know, I mean, why don't we, I will say a word or two on what's different about this transition. I think this transition, as I said, is bigger, is more in the public eye. You know, more people have heard about carbon offsets and carbon markets. So I think the stakes are higher in this transition. There are more players both on the supply and the demand side than there ever have been. How, you know, this transition and this inflection impacts those players, I think is incredibly important. I also think that if you look at the data from the ecosystem marketplace and others, what we've seen is there's been an increase in volume of voluntary carbon market credits coming from developed countries, from North America, for instance, and a decrease in the volume and pricing coming from Africa, Asia, and Latin America. To me, that is a movement in the wrong direction, in the sense that I think voluntary markets have played an incredibly important role in addressing some of the climate injustices or climate equity issues for developing countries. And we may be inadvertently hampering that going forward. So I think on a lot of levels, this inflection point feels different, particularly because the stakes are higher. So anybody else want to take any of those questions or comments on any of them quickly?
If I may, a couple of questions. One is just to reflect on the latest comment in the chat from Natasha to me. yes, the buyer data from 2021 and 22, it does say that millions of tons of renewable energy credits were bought in those years. Overall, even those millions pale in comparison with the overall supply that comes all the way back from Kyoto Protocol period. And my point still stands. Given that VCMI has said that only CCP eligible credits are required, I would not see any future going forward for renewable energy credits. Now, this is kind of the same question as one that I think Henry has put forward. What do we do with credits that didn't make the grade to the ICVCM? First of all, that's not a question for the ICVCM, at least not in our work program. The theory of change there is that if there are some credits, and I do believe there are enormous amounts of credits that do not meet our standards at ICVCM, but that may have or hold other types of values, and I'm thinking specifically with respect to nature-based projects, then there may be some other way of, compensating those projects, i.e., the fact that they are not up to scratch in terms of the methodological standards that we put forward shouldn't prevent us from salvaging worthwhile projects, especially those that have, attendant co-benefits such as improving livelihoods in vulnerable communities, etc. But I think that's another stage in our, let's say, fixing of the voluntary carbon market. And then I just wanted to reply one thing. Sebastian asked, do we have any worries on Article 6 negotiations actually weakening the integrity of carbon markets? Now, the first comment I would have to that question is, how far have we moved away from this notion that was always there, that somehow the voluntary carbon market will always be subpar, and that the Article 6 would actually be the gold standard? And now we have somebody questioning, well, could it happen that we would have a better standard overall and a better reputation in Article 6? I'm a former UNFCCC negotiator and a former member of the CDM executive board, so I'm well aware of the political tensions that very often in the UN will lead to not higher, but actually lower integrity. Either way, I think these two initiatives complement each other and we reinforce each other. So just as I was mentioning, the fact that we came out with a decision that says renewable energy methodologies were not meeting our standards reinforces those within the UN that will say, well, look at what the voluntary carbon market is saying. We need to at least, take a deep look at their arguments. And we will be doing the same. So I do think that hopefully we're not weakening, but we're, striving to get to the best outcome. Having said that, there are forces both in our side, but certainly on the UN side that will move or lead us to weaken integrity over time. And we have to collectively address those forces.
So hopefully we'll lift our boats. And thanks to the panelists. We don't have any more time. I really appreciate the thoughtful discussion here. Thanks to EDF, Judith, Connor, and the team for putting this together. Really appreciate that. I'll offer myself up if anybody has further questions. Just let me know. I will type in my email here in the chat. But we'll come to a close here. And thanks, Sassan and Pedro and Dylan for participating. Really, really interesting and useful discussion. So thank you, everyone.
Thank you.
Thank you.